these tags are Wyckoff stages, and just in the past week or so, I believe last point of supply has been displayed. So basically this time, if we look at the line chart, the tip of it's higher than what we had last time. So that's basically mid-Feb, and then a mini one around late March, and then now it bounced all the way even higher than the resistance line, the purple line here, defined by the automatic reaction. However, when we look at this week's the red candle, it got rejected from this resistance line defined by the buying climax, and then the price went all the way below automatic reaction resistance line. There's only less than a day left for this week's candle, so if it closed below the purple line, once again the trading range could be somewhere between the purple line and the white line, basically the top edge of the long-term playground zone. If the environment turns really bad, then the price may re-enter the long-term playground zone and start another accumulation cycle. As of this moment, there's still some distance from like the current price at around 3.30 cents or 3.28 if you want to be exact, all the way to 1.9. So unless something very shocking happen, otherwise it's not going to be easy to have that happen in a day, going all the way through the white line that I'm saying. The yellow line, it can happen. We have seen this happen in early March. So from the current level all the way to somewhere below the yellow line, it's totally possible by just referring to what happened a month or 5-6 weeks ago. If we look at the daily, so remember I said if it really goes up and the price really goes up and then re-enters the pink short-term playground zone, that was largely a place for trading between November last year all the way to late February. So the significance here is after 4 consecutive days of price surges, we can see it has been continuously suppressed by this center line. I've drawn this line, I don't know, maybe a month or two ago already. This is basically drawn by taking reference of the earlier candlesticks or price action, if you would like. And we can see that since the very first green candle that opened inside the box, that's April 25th, and then for the consecutive 7 days, basically, if we look at this, none of them were able to close above this pink line. So we can see it's very difficult for this to happen immediately, even if somebody was thinking, oh, maybe it would give a higher second test, if not like an upthrust of the upthrust. It's not that normal. So there's one thing we need to observe. Sorry, 1 second. We need to observe, and that is whether the candlesticks will close below this pink line, the bottom edge of the pink box. If it does, once again, the price will re-enter, or the trading will re-enter this crazy zone over here. You see all these crazy price actions. Reason being, there aren't much overlap over like this very long range. Basically from the yellow line to the pink line, it was straight or big price jump up and up and up. It didn't have any overlapping activities like what I'm showing here. If you look at the guiding lines I'm circling, so at least this would become a stronger support level, given there were more trading activities or change of hands over there. That's not the case for these three candles. That's why we see a very those very long candles, basically big swings of prices whenever it gets to this level. So if the price really close below the pink, be careful that another round of crazy roller coaster ride it's going to happen. So that's pretty much for Sweetcoin. I'll move on to